Wait, hello. Are the audio and visuals okay? If you can hear me and see my screen clearly, please type a 0 in the chat room. Oh, hello Gura. Hello Castris. How are you today? Again, sorry for the background noises. Let's start today's live stream. Good evening, everyone. Welcome to Weebearn, which helps you grow rich. We are a comprehensive money educational platform dedicated to nurture entrepreneurs, investors, and capitalists among secondary school students, cosplayers, and anime lovers. Today is our 6th live streaming in English. So let me introduce our channels. Weebearn literally means an otaku money-making channel, a platform dedicated to facilitate financial gain, make otakus great again, and make weebs rich again. In Cantonese, 毒撚賺錢台. In today's market reading AI Miscellaneous, we are going to go through the GPT2 to Kimi K3 3 recent financial reports, 3 earnings reports from Meta, Amazon, and Microsoft, respectively. And we are going to introduce our United Empires of Otakus, also known as the VTubers Alliance, a decentralized autonomous organization focusing on supporting the development of aspiring virtual idols of the future generation. We encourage participation from interested secondary school students or teenagers looking to embark on a VTuber career. If you are a secondary school student and you are passionate about being a VTuber, feel free to join our Weebearn VTubers Incubation program and our auto agency group. And furthermore, a brief overview of our financial education offerings within the metaverse, personal development courses, life advisory, and life coaching services offered by Weebearn, the Otaku money-making channel is provided. The motivation behind initiating this reading series parallels the reasons for engaging with artificial intelligence topics. The recognition of a correlation between wealth and reading habits based on statistical studies, coupled with our market research revealing growth opportunities for reading discussions among peers within the VTuber industry. We acknowledge the importance of literature reviews in developing effective monetary strategies, reinforcing the necessity of standing on the shoulders of giants to uncover principles or strategies for financial success. We encourage audience engagement through likes, subscriptions, and shares, expressing a commitment to fostering a comprehensive wealth management educational platform. And we aim at nurturing capitalist entrepreneurs and financially successful cosplayers and VTubers. And lastly, if you enjoy this episode, please subscribe Weebearn on YouTube and share our videos with your friends and classmates who are interested in anime, macroeconomics, gaming, AI, cosplay, technology, and options trading. Recognizing that this is one of our first few times live streaming in English, and acknowledging my limited proficiency in English regarding some important money management concepts, we will repeat in Chinese. And references and bibliographies to pertinent financial literature, research reports, and theses will also be shared in the comment section. Collaborative reading on AI engineering documentation. So, if you are interested in the topics or the readings we talk about, you may also read with us together. Same as usual, let's just briefly introduce the market. This week, the Nasdaq index rose by 1.6% to 25,373 points. Tesla saw a decline of 0.6% to 311, while NVIDIA decreased by 3% to 201. Gold increased by 1% to 4,100, and crude oil dropped by 4% to 87. Bitcoin BTC fell by 1.7% to $63,000, and Ethereum decreased slightly by 0.1% to 1,860. The current market valuation remains high, posing significant risk if the issue of AI spending not yielding returns is not resolved. Additionally, factors such as war, oil prices, and high interest rates further elevate these risks. This week, we reduce in the short term, will only increase investments in some undervalued high quality companies with rich in intrinsic value. In terms of economic data this week, the results were mixed. Inflationary pressures have slightly eased, however. Consumer confidence and GDP were weaker than anticipated. The Federal Reserve maintained its interest rate within a 9 to 3 vote, keeping the target range at 3.5% to 3.75%. The core PCE for June rose by 3.3% year-over-year, aligning with expectations but slightly lower than the previous value of 3.4%, indicating a slight easing in the US price pressures despite ongoing uncertainties due to war with Iran. The final July University of Michigan Consumer Sentiment Index was 55.2, higher than the initial value of 54.4, mainly due to falling gasoline prices. The July Consumer Confidence Index was 19.8, slightly below the expected 92.4, primarily due to significant price pressures and a cooling job market. The US Q2 GDP grew by 1.5%, falling short of the expected 2.1%, mainly due to an expanded trade deficit and inventory liquidation by companies. Initial jobless claims last week were at 197,000, lower than expected. Despite market rebounds, core risks remain. It is crucial to stay vigilant and focus on defensive and hedging strategies. Excuse. Sorry, there was a moth flying in my home. Let's continue. According to a report by Coindesk, Cold Card hardware was recently experienced a significant security breach, resulting in an attack involving $89 million. Unlike the reaction during the FTX collapse, where investors moved away from central exchanges in favor of self-custody solution, this incident has prompted a surge of users transferring their Bitcoin back to centralized exchanges. Industry experts highlight that this contrasting response underscores the varying impact of different types of risk events on market confidence. During the FTX crisis, the distrust in centralized institutions drove investors towards self-custody, reflecting a preference for personal control. However, the hardware wallet vulnerability has led some users to reassess the security trade-offs of self-custody, often instead to rely on the perceived robust defense mechanisms of major exchanges. This behavior suggests a structural difference in how investors perceive risk, with technical security threats potentially pushing them to trust centralized platforms over compromised hardware solutions by themselves. And this is a shift from what one's own individual technical risk back to the centralized or intermediary risk itself. Every time I go away, the camera go out of focus. Cold Card, a favorite cold wallet solution among institutions and high net worth individuals, has become the focal point of renewed scrutiny concerning hardware wallet supply chain security and firmware update mechanisms. Industry experts widely acknowledge that even certified hardware wallets are not infallible, and users should implement a defense-in-depth strategy to safeguard their assets. This incident underscores the critical importance of robust security practices and continuous vigilance in the rapidly evolving digital asset landscape. As the industry progresses, stakeholders are encouraged to remain proactive in assessing and enhancing their security protocols to protect against emerging threats. In a significant move to stabilize the yen, the United States and Japan have embarked on a joint intervention in the currency markets, as reported by Watcher Guru. This ongoing initiative underscores the persistent concerns of both nations' authorities regarding exchange rate stability and their unified stance against the yen's depreciation trend. Such joint interventions typically involve the coordinated efforts of the central banks from both countries to either purchase the target currency or sell other currencies, thereby influencing exchange rate movements. This form of cross-border policy coordination is relatively rare in global financial markets, highlighting the extent of the devaluation pressures faced by the yen, which has necessitated official intervention at an international level. The decision to engage in this collaborative effort reflects a strategic approach to address the challenges posed by volatile currency fluctuations, ensuring that the yen's value remains within a range that supports economic stability and growth. Both nations recognize Both nations recognize the critical importance of maintaining balanced exchange rates, which are essential for fostering international trade and investment. As the intervention continues, market participants will closely monitor developments for indications of its effectiveness and any potential adjustments in strategy. The outcome of this intervention will likely have significant implications for global financial markets as well as for the economic policies for both Japan and the United States. The recent launch of Moonshot's AI, Kimi K3, has sparked renewed discussions about the evolution of artificial intelligence (AI) models and the impact on semiconductor demand. While comparisons with predecessors like DeepSeek are unavoidable, such comparisons risk missing a crucial structural transition within the AI landscape. Kimi K3 indicates that the next competitive edge in AI may pivot from computational power to advancements in memory architecture. Kimi K3 is engineered on a sparse mixture of express MOE architecture, boasting approximately 2.8 trillion parameters. However, it activates only a fraction of these during interference. However, it activates only a fraction of these during interference, significantly enhancing computational efficiency without necessitating simultaneous processing of every parameter. Despite this efficiency, the model must still reside within the system's memory hierarchy. Coupled with its impressive 1 million token context window, the focus is shifting from raw computation to memory capacity and bandwidth as the primary limiting factors. This shift could potentially alter how investors evaluate AI infrastructure demands. The implications of this shift are profound, extending beyond mere GPU performance. While software innovations such as sparsity, quantization, and intelligent routing continue to reduce compute requirements, memory remains bound by physical limitations. As frontier models expand in size and context length, there is likely to be an increased demand for high bandwidth memory (HBM), advanced packaging, high-speed interconnects, and rack-scale architectures capable of supporting ever larger models. Instead of diminishing the semiconductor investment thesis, greater interference efficiency could accelerate enterprise AI adoption, thereby reinforcing demand across the broader infrastructure stack. Just as the Jevons paradox we mentioned in our previous live streaming. This evolution is unfolding amid an intensifying US-China technology rivalry. US export controls have restricted China's access to NVIDIA's most advanced AI accelerators, prompting Chinese developers to focus on architectural efficiency rather than relying solely on cutting-edge hardware. By the way, are there any audience who are, is there any audience who's interested in trading GPUs? If you are interested in trading GPUs, please join our Weebearn Discord group and exchange GPUs there with other groupmates. Simultaneously, global demand for AI accelerators and HBM continues to outstrip near-term supply, highlighting that AI leadership increasingly hinges on securing advanced semiconductor manufacturing, memory production, and packaging capacity. The competition is no longer limited to GPUs, but now encompasses the entire AI technology stack, from chips and memory to software optimization and system design or kernel optimization. Kimi K3 thus represents more than just another competitive large language model. It signifies a structural transition in AI infrastructure. In this new landscape, deployment economics increasingly depend on how efficiently systems store, move, and utilize data. As frontier model capabilities gradually converge, competitive advantage will likely be determined not merely by who possesses the most computational power, but by who can build the most memory-efficient AI systems at scale. For investors, while the AI bottleneck may be shifting, the infrastructure opportunity remains robust and intact. As the AI industry continues to evolve, it is imperative for stakeholders to recognize and adapt to these emerging trends. The shift from compute-centric to memory-efficient architectures could redefine competitive dynamics and investment strategies within the sector. As we move forward, the ability to efficiently manage and optimize memory resources will likely become a critical determinant of success in the rapidly advancing world of artificial intelligence. And let me share the reference to our first financial report for comprehension today. And this is let me share the link to our Discord community again. Can anyone see my share screen now? Oh, can you see the screen? Now I think it's okay. If you can see my share screen, please type a numeric 1 in the chat room. Okay. Gura can see my share screen, so let's continue. Let me share the link to the Meta earnings report. This week has been quite a shock in the financial markets, particularly in the AI sector. Early in last week, sentiment was overwhelmingly negative, with AI-related stocks experiencing relentless declines. Across various investor groups, the mood was grim and pessimism seemed to dominate discussion. However, Thursday marked a dramatic shift as the market staged an impressive reversal, leaving so many investors and analysts pondering the underlying causes of this sudden change. The sharp downturn in AI stocks this month has raised questions regarding whether the sector has reached a temporary low. While we typically refrain from giving predictions, unlike in the prediction market, there are compelling reasons to believe that the recent sell-off may have been more technical than fundamental. And you'll see why. In our point of view, after discussing with our Weebearn team, and actually, the United Empires of Otakus, as a team, feel free to join our equity research or value investment team if you are interested. So in our view, approximately 20% or 25% of the decline can be attributed to fundamental concerns: rising oil prices, geopolitical tensions, interest rate hikes, excessive capital expenditures, and cyclical financing pressures. These issues are indeed valid, but not unprecedented. They tend to resurface every few months and are largely baked into market expectations. And the remaining 75 to 80% of the decline appears to be driven by technical factors. And indeed, Weebearn, I personally grow as a technical analyst. Back in the old days, if you are an old audience and you have watched our early days live streaming, back in the old days, our channel provides some beginners level technical analysis courses as well. Over the past few months or the past quarter, an influx of high leverage investors entered the market, many driven by fear of missing out FOMO. And some are the teenagers in the Korean market. They purchase some 2x ETFs, leverage ETFs, just for hedging against the inflation. And if you understand the Korean society, you understand why they have to do so. So the only hope or only living hope for teens to survive in the Korean society is to utilize leverage. And when prices begin to retreat or when there is some significant short-term drawdown, these leverage positions will force to liquidate. Or even if there is no liquidation, some of them may be they may, even if they are not forced to liquidate, they may mistakenly sell their positions only because of fear, uncertainty, and doubt, triggering a chain reaction of sell-offs, a classic long squeeze scenario. In such instances, fundamentals are largely irrelevant. Liquidity concerns and panic selling dominate. So the key question is, has deleveraging run its course? The crux of the matter lies in whether the deleveraging process has concluded. A notable event this week, the liquidation of a $25 billion fund, serves as a significant signal. While this is undoubtedly unfortunate for those involved, it also suggests that a substantial portion of leverage positions may have been cleared. For short sellers observing this development, it is likely a cue to reconsider their strategies. Pushing prices lower further may yield diminishing returns while increasing risk exposure. That said, this does not imply an immediate V-shaped recovery for the market. There are two primary reasons why a swift rebound to a previous high is unlikely. Firstly, during the earlier rally, marginal buyers were largely retail investors, employing high leverage and driven by FOMO. So there is a shift in marginal buyers following this month's correction. The profile of marginal buyers has shifted significantly. Future entrants are likely to be more cautious, with diversified capital sources and a focus on tangible earnings. The investment horizons will extend beyond weeks to months or even years. This shift will likely lead to structural adjustments within the AI sector, just like the shift from short-term holders towards long-term holders in the Bitcoin market. Companies with strong fundamentals and profitability will recover more robustly than those relying solely on speculative narratives. The second reason is the narrative vacuum. Markets thrive on compelling stories. The previous narrative, AI stocks only go up if you don't invest now, you'll be left behind, has been thoroughly dismantled. A new narrative has yet to emerge. While statements like AI fundamentals remain strong and valuations are reasonable for steady growth over the next 18 months may be accurate, they lack the emotional resonance needed to drive widespread investor enthusiasm. Until another breakthrough story, such as significant revenue generation from AI agents, or transformative applications, or even artificial general intelligence, captures public imagination, risk appetite is unlikely to return in full force. For implications for long-term investors, or for those focused on fundamentals, the current environment presents an opportunity rather than a challenge. The past few months have been frustrating for value-driven investors. Markets rewarded momentum over substance, with little regard for earnings quality or competitive advantages. However, as leverage unwinds and speculative fervor dissipates, traditional investing principles regain prominence. Questions about profitability, competitive positioning, and long-term sustainability will once again become central to pricing decisions. This shift represents a healthier market dynamic and aligns well with disciplined investment strategies. While this week's events have been dramatic, they also underscore the importance of stability in fostering a healthy market environment. Excessive leveraging and FOMO-driven speculation create fragility, leading to sleepless nights for investors and heightened volatility. As capital begins to flow into diverse sectors and long-term investors replace short-term speculators, markets can regain their footing. In this context, a quieter market is often preferable. Reduced volatility allows investors to focus on fundamentals rather than being swept away by speculative trends. For those committed to rigorous analysis and disciplined decision-making, periods of relative calm often yield the best long-term returns. Looking ahead, this week's analysis will delve into the earnings reports of three major players in the United States stock market, namely Microsoft, Amazon, and Meta. These companies are pivotal in shaping both the technology landscape and broader market sentiment. By examining their financial performance and strategic outlooks, we can gain deeper insights into their trajectories within an evolving economic environment. While this week has been eventful and marked by significant shifts in market dynamics, it also offers valuable lessons about the importance of stability and fundamentals in driving sustainable growth. As we transition into a new phase of market sentiment, patience and discipline will be key virtues for investors seeking long-term success. Let's hope for a quieter week ahead. If you were to, let me drink my coffee first. Oh, and anyone may join into our discussion. Even if your comment is unrelated to our documentation or to our topics, you may simply just type in our chat room. Just chat freely. No worries, since WeebearnImperialArmy is a capitalist platform advocating freedom of speech. If you were to judge Meta's latest financial performance based solely on headlines, it might seem like the company is facing significant trouble. In terms of EPS, earnings per share is only $6.18 per share, missing market expectations of $7.14 to $7.22 by approximately 13%. Also, from the perspective of operating margin, its operating margin dropped from over 40% to 31%. To make things worse, its free cash flow plummeted from 10 to 12 billion US dollars per quarter to a mere 784 million. So the market expectation was as large as 11 billion US dollars of free cash flow, but it drops by around 30%. For a company that was generating cash at an extraordinary pace just last quarter, this sharp decline in free cash flow has understandable alarmed investors, leading to a drop in Meta's stock price. Also, if you know, Meta has fired so many engineers, and recently they mistakenly banned many users. Even Weebearn was banned by Meta mistakenly, and they don't have enough manpower to handle the appeals or customer service. So I think the operations of Meta is very poor. But does this mean Meta is losing its edge? To answer this question, we have to unpack the survey's data. And despite the worrying headline numbers within the earnings report, you can see that Meta's fundamental business remains robust. and we have to be neutral. We have to be objective. Even though we don't like Meta because it mistakenly banned our accounts, we still have to give a fair judgment regarding its valuation. Its advertising revenue grew by 27 to 28% year over year, underscoring the strength of Meta's core revenue driver. Can you see my shares? Okay, let me share the link to this report in the chat room again. Its daily active people DAP continued healthy growth, indicating sustained user engagement across Meta's platforms. And also, Meta's AI models have demonstrably enhanced and targeting and recommendations. Enhanced ad targeting and recommendations, driving improved conversion rates. There was a meme talking about Meta's chief AI officer boast about surpassing one of Gamma's model, but it's just a flash model. I think it's Meta's AI surpassing one of Gamma's flash model. Or was it Gemini? So it is one of the weak model by Google. And in terms of operating income adjustments, excluding one-time costs such as the $3.6 billion in legal settlements and restructuring expenses, operating profit actually grew 9% year over year. These metrics highlight that Meta's existing business model remains one of the most powerful advertising ecosystems globally. And although it's sad to hear this, the headline challenges are less about the health of its corporations and more about how the market perceives market's future investments and uncertainties. Let's talk about what the market pricing is. What is the market pricing in? If the fundamentals are solid, why is Meta stock under pressure? The answer lies in investors' discomfort with uncertainty, specifically regarding its capital expenditures, CapEx, and returns on investment (ROI). Meta's annual CapEx has surged to an estimated 130 to 145 billion, representing a staggering 55% increase in spending. This has squeezed free cash flow significantly, leaving investors questioning whether these investments will yield tangible returns in the near term. Earlier speculation suggested that Meta might monetize its idle AI computing capacity by renting it out to external customers, akin to Amazon Web Services (AWS). Such a move could have provided an immediate revenue stream to offset the heavy CapEx burden. However, during Meta's earnings call, its CEO Mark Zuckerberg tempered expectations, stating, "We're not selling AI compute capacity because we don't even have enough for our own needs." This comment shifted the narrative from a promising new revenue stream to a long-term strategic option still under development. For now, investors are left grappling with quarters of high spending without immediate revenue offsets, a scenario that amplifies concerns over ROI. Analysts are pressing Meta on whether its massive AI investments are fundamentally defensive, to avoid falling behind competitors like Google and OpenAI, or offensive, aimed at unlocking new growth opportunities. Until Meta can provide concrete data on how its AI initiatives directly translate into revenue or product innovation, skepticism will persist. The market's reaction, reflected in the stock price decline, is a rational response to its ambiguity. Mark Zuckerberg has made a deliberate decision. He is opting out of playing the quarterly results game. His approach is rooted in a clear long-term vision. The first is AI as the next platform. Mark Zuckerberg views AI as foundational to future technological evolution, requiring immense computational resources to scale effectively. The second one is CapEx for strategic advantage. The short-term suppression of cash flow is a calculated trade-off for long-term dominance in AI-driven platforms and products. The third is avoiding premature targets by refraining from prematurely quantifying revenue goals for nascent AI initiatives. Zuckerberg is prioritizing optimal long-term outcomes over short-term investor appeasements. And this approach is similar to the one Elon Musk did, and it comes with consequences. By withholding near-term projections, Zuckerberg leaves room for market speculation, often conservative and pessimistic, which translates into lower valuation multiples for Meta amid uncertainty. Ultimately, this financial report presents investors with a fundamental question. Do you still trust Zuckerberg's judgment on AI? And if you sincerely believe in his vision and ability to execute, the current stock price reflects a discount driven by short-term noise, a potential buying opportunity for patient investors focused on long-term gains. Conversely, if you remain unconvinced or require more evidence of ROI, demanding higher risk compensation through lower valuations is entirely justified. Meta's financial report underscores the tension between different time horizons. Zuckerberg is focused on building a 5-year roadmap for AI dominance, while the market is pricing in uncertainty over the next few quarters. Neither perspective is inherently wrong. They simply reflect differing priorities and risk tolerances. The ultimate outcome will depend on whether Zuckerberg can deliver quantifiable results from his AI investments, and how long investors are willing to wait for those results to materialize. As an investor, our decision boils down to one question. Are we willing to bet on Zuckerberg's long-term vision for AI? If so, today's challenges may be tomorrow's opportunities. If not, skepticism remains an entirely fair stance in light of current uncertainties. In a speaking of Google's Gemini, let me supplement some recent advancements in embodied AI. There's the Google DeepMind's Gemini Robotics 2. In a significant leap for the field of robotics and artificial intelligence, Google DeepMind has unveiled Gemini Robotics 2, a sophisticated platform designed to enhance the capabilities of embodied AI. Described as one brain for any robot, Gemini Robotics 2 marks a pivotal advancement in the domain, extending its powers from mere tabletop manipulation to comprehensive full body control and multi-robot coordination. The launch of Gemini Robotics 2 has been accompanied by a series of impressive demonstrations that underscore its potential. These demonstrations highlight the platform's ability to perform complex motor tasks, including whole-body humanoid control, advanced dexterity, and collaborative multi-robot operations. Notable tasks showcased include intricate knot tying, screwing in light bulbs, bending to retrieve objects, and orchestrating a collaborative garage cleanup. Such tasks illustrate the platform's capacity to handle non-trivial motor activities with fitness and precision. Central to the Gemini Robotics 2 suite is the Gemini Robotics ER2, a high-level embodied reasoning model. This model is engineered to observe, plan, and coordinate effectively using a Vision Language Action VLA model. Furthermore, it is capable of tracking progress and recovering from failed steps during extended multi-minute tasks. This adaptability and resilience position Gemini Robotics 2 as a significant player in the realm of embodied AI. The technical narrative surrounding Gemini Robotics 2 emphasizes heterogeneity and adaptation, transcending beyond mere demonstration aesthetics. A notable feature is the platform's ability to control multiple hardware types from a single checkpoint. The on-device tool component reportedly adapts to new two-arm robots with less than 200 shots, showcasing its efficiency and versatility. This adaptability is crucial for the seamless integration of diverse robotic systems. Industry commentators such as Kimonos have highlighted these adaptive capabilities, while others have focused on the availability of ER2's API and its embodied reasoning metrics. Meanwhile, NVIDIA Robotics has leveraged this development to promote its local hardware solutions, notably the Jetson AGX Claw for humanoid and autonomous systems. This announcement distinguishes itself from previous robotics innovation by integrating a broad platform approaching with planning, dexterity, and live streaming APIs. Unlike prior endeavors that often center on singular manipulation benchmarks, Gemini Robotics 2 offers a comprehensive suite of capabilities that promise to redefine the landscape of embodied AI. In conclusion, Google demands Gemini Robotics 2 represents a substantial advancement in robotics technology, offering a versatile and adaptive platform capable of addressing complex challenges in embodied AI. As this technology continues to evolve, it holds the potential to revolutionize how robotics interact with their environments and collaborate with one another. Let's talk about the financial report of Microsoft. Earnings release FY 26 Q4. Microsoft's latest quarterly earnings report has been released, and the numbers are quite impressive. Azure has seen a 43% growth. Cloud revenue has reached nearly $60 billion, and commercial remaining performance obligations (RPO) have surged to $678 billion. While these figures are undoubtedly noteworthy, there is another metric in the report that stands out as even more significant. Over the past 3 quarters, the number of paid seats for Microsoft 365 Copilot has grown from 15 million to over 30 million, doubling each quarter. This rapid adoption rate represents more than just a strong performance. It signals a transformative shift for Microsoft and its AI strategy. Why Copilot's growth outshines Azure's numbers? Azure's growth is impressive, but it's also multifaceted. Its revenue includes contributions from traditional enterprise cloud migrations, general commuting workloads, and long-term non-AI contracts. These factors make it difficult to isolate how much of Azure's growth is directly driven by artificial intelligence. In contrast, the growth in Microsoft 365 Copilot's paid seats provides a clear and direct indicator of AI's monetization potential for Microsoft. This single data point answers a critical question. Can AI generate tangible revenue for the company? The answer, based on these numbers, is a resounding yes. A major concern in the enterprise software market over the past year has been the risk of shelfware. Software purchased but left unused. The fear was that chief information officers officers, CIOs under pressure to adopt AI solutions might invest heavily in tools like Copilot only to find that employees don't use them effectively. This would lead to cancellations and non-renewals in subsequent years. Microsoft's latest data appears to dispel these fears. The committee reports that user satisfaction has doubled over the past 3 quarters. Usage frequency has increased nearly twofold per user year over year. Weekly engagement levels now rival those of essential tools like Outlook and Teams. These metrics indicate that Copilot is transitioning from an experimental tool to an indispensable part of employees' daily workflows. Microsoft currently has a global base of approximately 450 to 480 million commercial Microsoft 365 paid users. While 30 million Copilot seats, the attach rate stands at roughly 6%. While this suggests that AI's contribution to Microsoft's overall revenue remains modest, it also highlights a vast opportunity for future growth. The challenge now lies in scaling this attach rate to double digits. However, achieving this requires overcoming a critical technical and cost bottleneck. To expand Copilot's adoption, Microsoft must address the high costs associated with AI inference. CEO Satya Nadella recently outlined Microsoft's new model system architecture, which separates the AI brain, the model itself, from the orchestration layer, the tools and routing system. Previously, regardless of the complexity of a task, whether drafting an email or conducting a complex financial analysis, Microsoft's backend relied on OpenAI's flagship models, such as GPT 5.6. This approach was akin to using a gas-guzzling sports car for a short trip to buy groceries. Every user interaction incurred significant inference costs, eroding software profit margins. To mitigate this, Microsoft has developed an intelligent backend dispatcher. This system dynamically routes tasks based on their complexity. While simple, repetitive tasks are handled by Microsoft cost-efficient lightweight models, SLMs, as small language models or open-source models. Complex tasks requiring deep reasoning are routed to OpenAI's premium models. This architectural shift sends 2 strong strategic signals. The first is a reduced dependency on OpenAI. No major enterprise wants to rely indefinitely on a single external vendor for its core operations. The second is its cost efficiency. Dynamic routing is crucial for maintaining high software margins as user adoption scales exponentially. This transformation can be likened to the evolution from an electricity reseller to a utility grid operator. In the AI era, foundational models are akin to power plants. By the way, we are going to talk about power plant investment on our Tuesday live streaming, I think. Capital intensive, rapidly evolving, and fiercely competitive. If Microsoft were merely reselling OpenAI models through Copilot, it would essentially be acting as a middleman, with its profitability tied to OpenAI's pricing and business decisions. However, through its Azure AI Foundry and multimodal routing architecture, Microsoft is positioning itself as a power grid. The value of a power grid lies not in generating electricity, but in its ability to efficiently distribute energy from various sources, be it OpenAI, Meta's open source models, or Microsoft's own lightweight models to end users. By establishing itself as the grid of the AI ecosystem, Microsoft not only reduces its reliance on any single model provider to prevent single point of failure, but also captures the most lucrative portion of the value chain, orchestration and distribution. The financial data in this earnings report validates Microsoft's strategic pivot. Annual cloud revenue surpassed 214 billion, with nearly 90% coming from non-frontier model providers like OpenAI. Commercial RPO surged by 48% to 678 billion. Even excluding OpenAI-related commitments, RPO still grew by 25%, with all incremental growth coming from non-frontier model companies. Earlier this year, OpenAI accounted for roughly 45% of RPO. That concentration has since decreased significantly as Microsoft ecosystem diversifies. These figures underscore a critical shift. Microsoft growth engine is moving away from dependence on a single partner toward building a robust AI ecosystem. While the market celebrates Azure's growth and Copilot's adoption rates, Satya Nadella may be quietly celebrating something else. Copilot's model agnosticism. There's the commoditization of models. Copilot's model agnosticism. Thus, a product untethered from any single model provider is inherently more resilient and profitable. Microsoft is betting on the eventual commoditization of large language models (LLMs). As these models become cheaper and more interchangeable, the real value will lie in how effectively they are orchestrated and deployed. This are used in our startups or companies. This bet is already paying off as OpenAI's share of RPO declines and non-OpenAI bookings accelerate, rising from 7% to 18%. Microsoft is proving that this growth strategy is no longer tied to one customer or one model. Instead, it's building an ecosystem where customers are drawn not by any single power plant, but by the unparalleled efficiency and reliability of Microsoft's power grid. In conclusion, while Azure's growth remains impressive and essential, it is Microsoft 365 Copilot's rapid adoption and its underlying architecture that represent the company's most promising path forward in the AI era. By focusing on scalability, cost efficiency, and model agnosticism, Microsoft is not just participating in the AI revolution, it is shaping its future. Recent headlines have sparked discussions regarding Microsoft capital expenditure CapEx adjustment, with reports suggesting a reduction in their 2026 CapEx guidance from 190 billion to 175 billion. This announcement was initially perceived as a positive signal by analysts and investors, indicating a potential moderation in the AI arms race narrative that has pressured tech stock prices for months. However, a closer examination of CFO Amy Hood's statements during the earnings call reveals a more nuanced reality. She clarified that except for the impact of a change in asset lifespan, Microsoft CapEx investment expectations for the 2026 calendar year remain unchanged. In simple terms, Microsoft spending remains consistent, but an accounting reclassification has altered the presentation of these figures. The accounting adjustment is from 15 years to 25 years. Beginning in fiscal year 2027, Microsoft will extend the estimated useful life of its data centers and office buildings from 15 to 25 years. This adjustment is based on operational experience, suggesting that these structures can endure longer than previously estimated. Although this accounting change may appear mundane, it has significant implications for how assets are recorded in financial statements under the United States Generally Accepted Accounting Principles (US-GAAP). Microsoft categorizes its leased data centers into two types. The first one is the finance leases. Similar to mortgage, these lease expenses are included in CapEx. The second one is the operating expenses. Operating expenses are operating leases are comparable to rent. These expenses are classified as operating costs and excluded from CapEx. One key criterion distinguishing these categories is whether these lease term constitutes more than 75% of the building's estimated lifespan. Previously, with a 15-year lifespan estimate, a 12-year lease will account for 80%, exceeding 75%, thus requiring inclusion in CapEx. However, with the lifespan extended to 25 years, the same lease now represents only 48%, allowing it to be reclassified as an operating lease and excluded from CapEx. This reclassification explains why Microsoft 2026 CapEx guidance decreased by $15 billion, a change entirely attributed to accounting adjustments rather than actual spending reductions. During the earnings call, Microsoft transparently stated that their investment plans in AI infrastructure, including GPU purchases and data center expansions, remain unchanged. In essence, Microsoft's financial commitments are unchanged. They have merely shifted expenses from the capital expenditure category to operating expenses, akin to repackaging a mortgage as rent. While the outflow of cash remains identical, the financial statements now present a more favorable debt profile. One might wonder if investors are aware of this accounting mechanism. Indeed, many institutional analysts quickly identified this during the earnings call. However, given current market conditions, there is a strong desire for reassurance that CapEx is not spiraling out of control. Recent concerns over escalating AI expenditures have loomed over tech giants like Alphabet and Microsoft, causing market anxiety. The fear extends beyond quarterly cash flow to whether these figures will continue to rise indefinitely. Coupled with accelerated Azure growth at 43%, Copilot's pace is surpassing 30 million with quarterly doubling, and revenue and EPS exceeding expectations. Together, the narrative has shifted to spending is stable while earnings accelerate. This represents a tacit compromise. Microsoft secures room for significant investments, while the market gains a sense of security. So the strategic signal behind the accounting change is that extending the lifespan of data centers to 25 years also signals Microsoft's confidence in their long-term value. This bold judgment suggests that despite rapid AI hardware advancements, such as GPUs with economic lifespans of just 3 to 5 years, the infrastructure itself, land, buildings, power, and cooling systems, can endure much longer with internal chip upgrades. By projecting a 25-year lifespan, Microsoft effectively declares AI infrastructure as foundational and enduring as power plants and highways. While this may be optimistic, it reflects Microsoft's genuine belief in sustained AI demand. Microsoft's latest financial report underscores its position as a formidable player in the AI arena, with genuine business growth and industry-leading AI monetization capabilities. However, it's essential to remain vigilant. The tech giant's arms race continues unabated despite this report. Microsoft remains committed to substantial annual investments nearing $200 billion. The essence of this spending game remains unchanged. Microsoft has merely adopted a more sophisticated and palatable approach to presenting its substantial financial commitments to the world. Let's talk about a recent news regarding the economy. A former OpenAI researcher, Leopold Aschenbrenner's hedge fund, Situational Awareness, has recently faced significant financial setbacks due to unsuccessful investments in AI infra stocks and adverse movements in short positions on software stocks. The fund is currently compelled to unwind several trades and raise cash to meet margin calls. According to sources, the fund's prime brokers are actively assisting in raising funds, with a major investment institution reportedly agreeing to acquire Situational Awareness publicly traded assets, although the buyer's identity remains undisclosed. Actually, most of us guess that the buyer is Jane Street. If you want to know more about this news, you may search for his name. It's still uncertain whether the fund can fully meet the margin requirements through asset sales. At its peak in early July, the fund size reached $45 billion, but has since encountered difficulties due to a sharp decline in its investment portfolio. Major brokers such as Bank of America, Goldman Sachs, and JP Morgan are aiding in capital raising or orderly position reduction, marketing a batch of long and short assets to potential buyers before Thursday market opening. The fund has been hit by a double setback, a decline in AI infrastructure stocks like SK Hynix impacting its long positions, and significant increases in software companies like Adobe affecting its short positions. So even hedging or a market neutral strategy may not be a good idea if you lose both sides. And we're going to talk about this also on Tuesday, why Liang Wenfeng chose only taking a long position and abandon these market neutral hedging strategies 2 years ago around. As of the end of the first quarter, the situational awareness position its largest holdings included Nibes Group, SanDisk, Micron, and CoreWeave, all of which have seen declines exceeding 35% this month, highlighting the rapid reversal in AI infrastructure trades. Discussions to sell shares in AI startup Anthropic have been held, but the outcome remains unclear, with the fund denying any active sale of Anthropic holdings. The actual financial losses and required capital remain undetermined, with the situation potentially evolving rapidly. This instance underscores the risk of high leverage trading, where rapid decline in portfolio value can trigger margin calls, necessitating asset sales or position reductions, just like liquidations for retail traders. At 25 years old, Aschenbrenner is a prominent figure in AI investment circles. He advocated for significant expansions in chips, memory, data centers, and power infrastructure for rapidly advancing AI systems in 2024, forming the basis of his investment strategy post-OpenAI. Aschenbrenner was dismissed from OpenAI for allegedly disclosing internal information, which he disputes, claiming he only shared non-confidential planning documents with external researchers for feedback. He also raised concern about OpenAI security measures, suggesting his dismissal was linked to tensions over these issues, although OpenAI denies this connection. The current challenges faced by situational awareness represent the most severe test of Aschenbrenner's investment theory since its inception, reflecting not only individual fund leverage risk, but also the potential rapid reversal in concentrated AI infrastructure trades amid scrutiny over AI stock valuations and capital expenditure returns. Speaking of OpenAI, in a recent publication, OpenAI unveiled significant advancements in the optimization of its GPT-5.6 model, focusing on enhancing inference acceleration and refining agentic harnesses. These improvements are designed to maximize token generation efficiency and streamline complex computational tasks, leading to substantial reductions in reserving costs and enhanced performance. OpenAI has implemented several systemic upgrades to boost inference acceleration without compromising quality. A key component of this enhancement is the self-optimization process, wherein GPT-5.6 so actively analyzes production traffic, optimizes load balancing, and autonomously refines production kernels using OpenAI's proprietary Triton and Gluon languages. This autonomous approach has resulted in a 20% reduction in end-to-end serving costs. Another significant advancement is speculative decoding. By conducting extensive experiments on its architecture, GPT-5.6 has improved its draft model, resulting in increased token generation efficiency by over 15%. This process involves testing changes in size, structure, and features while autonomously managing issues such as hardware failures and training instability. Furthermore, KV caching has been optimized to enhance batching, sharding, and cache management, tailored to specific workloads, particularly so in codecs. This optimization facilitates greater inference extraction from existing hardware resources. To address the complexities of multi-step tasks in tools like codecs and ChatGPT work, OpenAI has refined its ROS orchestration layer. This optimization aims to reduce repetitive compute costs through several strategic measures. One such measure is avoiding context bloat by surfacing tools, skills, and plugins only when necessary, deferred discovery, and capping tool outputs at 10,000 tokens by default. OpenAI prevents unnecessary expansion of the context window. Additionally, prompting caching plays a crucial role in maintaining efficiency. By treating all model visible history as append only, the harness preserves the prompt prefix, enabling the system to reuse previously computed data and maintain a high cache hit rate. These advancements have not only proven theoretical, but have also translated into tangible benefits. OpenAI has announced significant price reductions for its smaller models and introduced a new 2.5 times faster mode in SOL. Although the much anticipated 10 times faster Cerberus-driven mode is yet to be realized. These developments mark a substantial leap forward in AI model optimization. OpenAI's commitment to continuous improvement and innovation underscores its leadership in the AI field. As these optimizations are implemented, users can expect enhanced performance, reduced costs, and more efficient computational processes across various applications. OpenAI has made significant strides in reshaping the landscape of AI accessibility and performance with its recent pricing cuts for GPT-5.6 models and the introduction of a new tier, SOL Fast. These changes, coupled with ongoing discussions around the ARC AGI3 evaluation framework, highlighting the evolving dynamics of AI system design, cost efficiency, and agentic capabilities. In a move that has drawn widespread attention, OpenAI has aggressively reduced the pricing of its GPT-5.6 models. The Lunar variant saw an 80% price cut, while the Terra variant experienced a 20% reduction. Additionally, OpenAI introduced the Soul Fast tier, which offers up to 2.5 times lower latency at double the standard price. According to OpenAI developers, OpenAI devs, this new tier achieves faster response times without any reduction in model intelligence. The implications of these changes are profound, particularly for downstream applications. For instance, workflows within the ChatGPT app and Codex CLI are transitioning from GPT 5.4 to Luna, a shift that OpenAI projects will result in approximately 10 times lower costs. Industry observers such as Sama Nickdons and Miscellaneous have described this move as a pivotal advancement in the price-performance frontier. OpenAI attributed these pricing adjustments to a systems-level efficiency improvements that span multiple domains, including model architecture, inference stack optimization, and advancements in agentic harness design. These enhancements not only lower costs but also improve performance, making AI more accessible for a broader range of applications. Parallel to these developments, the RC AGI-3 evaluation framework has reignited discussions on what constitutes a complete AI system. The debate was centered on harness design, memory retention, and context compression. And let's come back to the financial report given by Amazon. I mean the financial reports of Amazon. And here is the bibliography of the Amazon's earnings report. Amazon's latest quarterly earnings report has captured significant attention, with its earnings per share EPS reaching an impressive $5.75, far exceeding analyst expectations of 1.82. That's around a triple. Unsurprisingly, the company's stock surged in after-hours trading. However, a closer examination reveals that this headline-grabbing EPS figure includes a substantial $53.4 billion. Excuse me. Amazon's operating income grew 43% year-over-year, reaching $27.5 billion, a testament to the company's ability to outperform market expectations on its core business metrics. Yet, beyond these fundamental numbers lies a deeper story that investors should focus on. Its headline-grabbing EPS figure of $5.75 includes a substantial $53.4 billion in other income, primarily attributed to the fair value appreciation of Amazon's investment in Anthropic, an AI-focused startup. While this an AI-focused enterprise, while this non-recurring gain has bolstered the top-line figure, Amazon's core operating performance remains robust even after stripping away this one-time windfall. And we have to consider three critical figures from the earnings report that stand out as indicators of Amazon's long-term growth trajectory. Amazon Web Services (AWS) posted a remarkable 37% revenue growth this quarter, marking its fastest expansion in the past 18 quarters. Considering AWS operates at a massive annualized revenue base of over 169 billion, such growth acceleration is highly unusual for a business of this scale. Typically, as business reach significant size, their growth rates tend to decelerate. This is because, let me explain a little bit on this point. As if you are in our Discord group, you may hear about that when your wealth is so large that it becomes significant compared to the whole market, or if you are considering a relatively shallow market with low liquidity or with low market depth, there's not much counterparty, or there's no liquidity for you to conduct your earning operations. So the alpha or the money making edge of you is quite limited, and consider even a more consider another extreme case. If you own the whole economy, if you own all resources of an economy of a country, like all you can earn is GDP, is the whole productivity within that country, and there's not much you can alter or operate. Let me repeat this point in Chinese. 當你嘅錢大到同成個市場比係有相當大嘅份量嘅時候，或者如果考慮一啲唔夠流動性，市場深度唔夠嘅市場，對於一啲咁大間嘅公司嚟講，佢可以賺到嘅空間相對有限，即係呢個係另一個極端。或者如果你考慮一個更極端嘅情況，假設你擁有整個經濟體，假設係整個國家嘅資源，咁你能夠賺得到嘅錢就只能夠係當地嗰個國家嘅 GDP，就係成個經濟實體嘅生產總值。你唔能夠賺到乜嘢超額報酬，賺唔到咩 alpha， 因為你以咁大筆本金嘅平均回報率係你可以操作嘅空間係相對有限，就唔同你小資金可以靈活做各種暴利操作咁樣。So what I want to say is that if your principal amount or your initial capital is so large that it's comparable to the whole market, your profitability will tend to the profitability of the whole market. It will asymptote to your asymptotic return rate, or your asymptotic income will tend to the growth rate of the whole market or the market index。當你嘅錢係越嚟越多嘅時候，你最終個回報率就會趨近於大盤指數。That's why for very very rich people, their money making strategies, their money management strategies may be reduced to index investment or value investment， 就係假設你係一個非常非常之有錢嘅人，你能夠做到嘅理財操作就係趨近於指數投資又或者係價值投資啦。Let's come back to the Amazon's report. Amazon Web Services (AWS) achieved a remarkable 37% revenue growth this quarter, marking its faster expansion in the previous 18 quarters. And considering AWS operates at a massive annualized revenue base of over 169 billion, such growth acceleration is highly unusual for a business of this large scale. And you may think that a bigger company can earn a larger ROI, but if you consider this exaggerate case or this extreme case, I mean, Jeff Bezos himself has once been the richest person or the wealthiest person in the world before. So under this extreme case, such a large company usually cannot achieve such a high growth rate. Typically, as businesses reach significant size, their growth rates tend to decelerate. But this time, AWS continues to defy expectations. And adding further confidence, AWS backlog of contracted orders has now reached an astounding $496 billion US, with management explicitly stating that demand will likely exceed production capacity through 2027. This suggests sustained growth potential and underscores AWS' pivotal role in Amazon's ecosystem. Amazon's AI-related revenue surged from an annualized 15 billion last quarter to 25 billion this quarter, a staggering increase of 10 billion, or 2/3 in just 3 months. This triple-digit growth rate signals a clear inflection point. Amazon's AI business is transitioning from experimental phases to large-scale commercial deployment. The Bedrock platform, Amazon's generative AI offering, has seen explosive adoption. Over the past 6 months, Bedrock added more customers than it did in its first 2 years combined. Moreover, customer spending on Bedrock during this quarter exceeded the cumulative spending across all prior quarters, a strong indicator of demand scaling rapidly. While AI infrastructure rental (IaaS) this is a money management concept known as infrastructure as a service. It means that AWS provides cloud infrastructure for consumers in return of some subscription fees. This is one of most common money management models or business models you can take reference of besides software as a service. This shift from selling raw compute hours to offering high-margin platform services signals a strategic transformation in Amazon's AI business model. And Amazon's self-designed chips Trainium for AI training, Inferentia for inference workloads, and Graviton for general-purpose computing have reached an internal revenue milestone of 25 billion annualized. Notably, these chips are not sold externally. Rather, this figure represents internal transfer pricing within Amazon's AWS division. So there's actually no exchange or no trading volume, but it's just an internal price within the AWS economy or within this AWS entity. 即係好似有價冇市咁樣。佢呢個呢3種晶片嘅價格，淨係喺 AWS 內部計價用，佢係冇同外界真實發生過嘅成交。Amazon CEO Andy Jassy has previously remarked that if Amazon were to sell these chips externally like NVIDIA, their equivalent revenue could be double the internal figure, highlighting the scale and potential of Amazon's chip design capabilities. 我啱先講有價冇市呢個可能講得唔係好好。咁啊，其實 Amazon 佢嘅 CEO 執行長就講啦，如果佢真真正正將呢啲芯片賣出去出邊個市場，好似 NVIDIA 佢係可以炒到上去翻倍，即係可以係佢內部個建議價嘅2倍。所以佢所謂有價冇市，並唔係佢賣唔出或者冇人買，而係佢唔肯賣出去呢種冇成交。So the zero trading volume is not because nobody wants these chips, but only because Amazon refuses to sell their chips. The synergy between Bedrock and Trainium paints a compelling picture. Bedrock is scaling rapidly at the platform level, while Trainium is driving efficiency at the hardware level. Together, these developments signal Amazon's emergence as a vertically integrated AI powerhouse. And as we've previously always mentioned that supply chain management is money management. And if you are pondering on money management, you must learn supply chain management. Supply chain management. And actually, Amazon is pretty successful in terms of vertical supply chain integration. And also NVIDIA also. 咁啊，如毒撚之前不嬲都話，供應鏈管理就是理財。如果你糾結緊好想做好你嘅理財，你一定必須要學供應鏈管理。而當中垂直供應鏈整合呢方面，Amazon 同 NVIDIA 都做得相當之好。So Bedrock is scaling rapidly at the platform level, while Trainium is driving efficiency at its hardware level. And together, these developments signal Amazon's emergence as a vertically integrated AI powerhouse. By running more workloads on proprietary chips, AWS achieves structural cost advantages over competitors relying on third-party suppliers like NVIDIA. Amazon's aggressive expansion comes at a cost. The company has raised its capital expenditure guidance for the year to $220 billion, a significant increase that reflects heavy investment in AI infrastructure and data centers. Consequently, free cash flow has turned negative with a net outflow of $7.6 billion over the past 12 months, compared to a positive $18.2 billion 1 year ago. Operating cash flow remains robust at $161 billion annually. There's a 33% increase in year-over-year, but reinvestment is outpacing cash generation. This is akin to a high-earning individual maxing out their credit cards while building a new home. Short-term financial strain for long-term gains. Moreover, management has indicated that capital intensity will remain elevated through at least 2027 due to persistent demand for AI compute capacity, a clear sign that Amazon is playing the long game in building infrastructure dominance. In response to investors' concerns about these hefty expenditures, CEO Andy Jassy provided rare transparency during the earnings call by outlining Amazon's investment payback model. He said that we typically achieve investment break-even in less than 3 years for servers and networking. We typically achieve investment break-even in less than 3 years for servers and networking equipment. These assets have useful lifespans of 5 to 6 years. Importantly, most of our current AI compute contracts have durations exceeding 5 years. In an ideal scenario, Amazon recoups its hardware investment within 3 years through customers' contracts and generates high-margin free cash flow during the remaining years of asset utilization. However, this formula relies heavily on maintaining high utilization rates. Any slowdown in AI demand could extend payback periods and compress margins. While Amazon's earnings report showcases strong operational metrics across AWS and AI, the most significant takeaway is the company's progress toward building a fully integrated architecture. From custom design chips to high-margin platform services like Bedrock, this full-stack approach reduces reliance on external suppliers and creates structural cost advantages that competitors will struggle to replicate. Such integration positions Amazon to capture long-term value across the entire AI ecosystem, while improving profitability over time. Though the headline EPS may fade from memory after a few quarters, this strategic shift will leave a lasting impact on Amazon's balance sheet and competitive positioning for years to come. In summary, Amazon's latest results are not just about quarterly performance. They reflect a broader transformation toward building and becoming an end-to-end technology provider capable of shaping the future of cloud computing and artificial intelligence at scale. Now let's come back to this article from GPT2 Kimi K3. You may also read it with us with Weebearn. It's quite a short and simple article. And let's take a break. The remarkable progress from GPT-2 model of 2019 to the Kimi K3 model of 2026 signifies a monumental leap in artificial intelligence capabilities, characterized by an increase in scale by a factor of 22,580. This advancement is not merely a matter of scaling up, but also involves significant architectural innovations that have been introduced over the past 7 years. The journey to achieving such a sophisticated model as Kimi K3 has been marked by strategic enhancement in neural network design, optimization techniques, and computational efficiency. These developments have collectively contributed to the model's ability to process and generate information with unprecedented accuracy and speed. As we delve into the working details, as we delve into the workload detailing this evolution, it becomes evident that while scale plays a crucial role, the underlying technological advancements are equally pivotal in shaping the future of AI. Let's begin with GPT-2. Actually, you may see the visualization of these models, you may visualize the brief architecture of all 7 significant models mentioned in this article, in this graph. To begin with, GPT2 is a decoder-only architecture. As you may see from this several lines of pseudocode. Given the token embeddings of shape BT and embed and position embeddings of shape T and embed, and when you put the token embed plus pose and into the transformer model, return the input receives token and position embeddings, and then each transformer block zoom in and returns the logics. And when you look closely into each transformer block, you can briefly summarize it as a layer norm, and then a causal self-attention, then another layer norm, and then a MLP. And actually, in our previous live streaming, although in Chinese, we have briefly introduced the first large language model, or the ancestor of all large language models. There's the transformer models by Google DeepMind. And you may see it after today's live streaming, you may find it in our previous live streaming. And let me share the link with you also. Yeah, attention is all you need. This is the fundamental basis in the development of modern large language model architecture. The GPT-2 model is characterized by its decoder-only architecture, which processes input through token and positional embeddings. Upon generating the final hidden state matrix, it employs a language model head to convert this matrix into vocabulary logics. In the context of autoregressive decoding, only the logics from the final position are utilized to determine the subsequent token. This approach, however, presents an inefficiency as the model calculates representations for each input position, while the decoding step only requires the final position's logics. And without KV cache, without employing a caching mechanism, this process would need to be repeated for each new token, leading to redundant computations. That's where the introduction of the KV cache addresses this inefficiency by storing key and value vectors of previously processed tokens, thereby preventing unnecessary recomputation. Nevertheless, the KV cache can grow significantly, potentially leading to a memory bandwidth bottleneck, and which gives the demand of high bandwidth storage. In terms of scale, the GPT-2 model comprises approximately 124 million parameters with its 50,000 possible tokens, 12 blocks, 12 heads, and an embedding dimension of 768, same as the initial paper. In comparison, a Kimi K3 model with its 2.8 trillion parameters nowadays is equivalent to about 22,580 GPT-2 models in terms of parameter count. So take a look at the linear attention layer. Linear attention offers a distinct approach to handling attention mechanisms in neural networks by applying a feature map such as a loop plus one. To Q and K, there's the query and key separately before their interaction. This adjustment allows the product to be reassociated, enabling the integration of the growing set of keys K and values V into a fixed D Cartesian product D state, D times D state. Historically, attention mechanisms face challenges due to the computational intensity of materializing the full n times n attention matrix, particularly before advancements like flash attention and autoregressive implementations with KB caches. While a KB cache prevents recomputation, it necessitates reading all previous keys and values at each decoding step, resulting in a per step cost that scales with a big O of ND and a total generation cost of order n squared D. Linear attention addresses this problem by replacing the expanding cache with a fixed state, transforming the computational workload across 9 n tokens to order big O of ND squared. This approach maintains sequential decoding but can significantly reduce memory traffic when n greatly exceeds D, offering substantial performance improvements over older cacherless models. However, when compared to modern KV cache implementations, the improvements are more modest. The primary distinction lies in the normalization process. Actually, linear attention substitutes the exponential function used in softmax with LU plus 1, applied individually to Q and K. Although both methods normalize the scores, the feature map in linear attention is a less expressive approximation of the softmax kernel, potentially affecting fidelity based on the architecture and workload. Despite this, linear attention adheres to the fundamental steps of making QK scores non-negative, dividing by the sum and computing the weighted average of values, thus preserving the core contract of attention mechanisms while employing a simplified feature map. And here you see why HBM memory comes into demand. Notice the excessive reads and writes, which in this article replaces with as you see the QKV, and there is the query key and value. S and EZ is comes from the cache, and if cache is if it's in the cache, or else is initialized as 0, and then you add the matrix multiplication of K and V, and then the denominator is the matrix multiplication of that there's the K from that with K, Q and Z. So you may see that this is a trade-off between efficiency and and practical accuracy. Should you have any problem when we talk about this article, feel free to stop me and ask me to explain more. So let's continue to DeltaNet. DeltaNet is a fast-weight programmer addresses the inherent challenges of finite cache management in neural networks. When a cache is finite, it must either overwrite or merge new information with existing data, leading to potential interference. In DeltaNet, the state from token in-1 is not allocated to a distinct slot. Rather, is integrated into a shared D by D matrix. This integration means that subsequent queries cannot access an isolated representation of each preceding token. However, this approach enhances efficiency by preventing the cache from expanding linearly with the sequence length order n. Sorry for the background noises. Though it introduces interference issues, as articulated in Schleck's paper on fast-weight programmers. When the sequence length surpasses storage capacity, the model encounters an overcapacity regime. To function effectively in such scenarios, the model must learn to dynamically interact with memory contents, selectively retaining or discarding key value associations. The purely additive update method is insufficient for this purpose, as continually adding new associations to a finite memory inevitably reaches a saturation point. Linear attention becomes appealing when n is significantly larger than d. However, once the state surpasses its effective capacity, interference arises due to additive updates without any removal from the cache. For instance, consider an association written as S equals K transpose P. Retrieving it with the same key results in K multiplied by K transpose V, which simplifies to K multiplied by K transpose V. Essentially, the squared norm of K times V. Normalizing K to unit length or dividing by its norm ensures exact retrieval of V. This normalization is crucial for precise risk and for making the erase operation to a true projection. In this context, Q acts as a learn pointer with weights Q and weights K WQ and WK, assessing the same residual stream. The query for a fact aligns with the key direction into which it was initially written. The update mechanism involves determining what current key information can be retrieved from the cache, subtracting this existing information from the new value to be stored, multiplying the key by this difference, and finally reintegrating the result. This process effectively replaces old information with new data. And here comes the DeltaNet, which with parallelizing linear transformers with delta rho. DeltaNet introduces a novel approach to parallelizing linear transformers by implementing a first-order linear recurrence with generalized householder transition matrices. If you have studied basic numeric methods or numeric analysis before, you may know that a householder transformation is just a linear transformation that describes a reflection about a hyperplane containing the origin, and is widely used in chiral decomposition, tridiagonalization for Heisenberg, and also in quantum computation. Back to DeltaNet. These householder matrices enable chunk-wise parallel forward passes for hardware-efficient linear time training. It splits the inputs and outputs into several chunks of size d, and computes outputs for each chunk. By dividing inputs and outputs into chunks of size c, DeltaNet computes outputs for each chunk based on the final state of the previous chunk and the query key value box of the current chunk together. While standard attention requires sequential computation due to corrections at every key vector, DeltaNet achieves hardware-efficient linear time training through a reparameterized delta update formulation. And this is a direct implementation of delta rule. For I in range t, we update ki by k I to I plus 1, vi by vi to y plus 1. These are the ki, vi, and bi extracted from k, v, and beta. And then the old v is ki times s. ui is assigned with bi times vi minus vo. And then s is updated by adding ki transpose and ui. Unlike standard attention, this formulation requires a correction for every key vector. You may find that the path to a parallel matrix multiplication is not immediately obvious. That's why we need the delta rule for a direct parallel multiplication. This approach involves splitting the computational cost into two components. The first is a fixed state update cost, independent of C, and a growing cost proportional to the chunk size. The choice of C balances computational efficiency and hardware utilization, with typical values like 64 or 128, aligning well with tensor core operations. For reformulating the delta updates, DeltaNet allows for simultaneous computation of deltas across chunks, enabling a performance comparison with multi-head attention MHA. There's the standard traditional attention by simply condensating or appending the different heads together. This innovative method is delta rule. The delta net method reduces the computational complexity from big O of n squared to near linear time to actually the fixed piece 2LD squared and then a growing piece 2LCD. Offering significant improvements in both efficiency and scalability for transformer-based models. In pure flop terms, floating point operations terms, setting C equals to 1 is the cheapest option. However, this is not necessarily the case in terms of wall clock time, since a GPU can complete more arithmetic faster when the work maps efficiently onto a matrix multiply hardware. And here is the extract from the original paper. The key point is updating ST with ST, the previous ST minus VT old KT transpose plus VT new KT transpose. As mentioned in the previous paragraph, the underlying issue is simple. The chunking method used for purely additive attention does not directly apply to the delta updates. So we need every single state in order to compute the information that needs to be subtracted out. And initially we can parallelize it the same way without a mathematical reparametrization. Therefore, the authors rewrite the delta updates from U is assigned to assigned with V new minus VO, and then ST is assigned with ST minus 1 plus KT K transpose U, and then O is assigned with Q times ST. A sequential loop computes 1 delta per iteration, and the reparametrized form is that ST equals ST minus 1 and that times an identity matrix minus beta T KT KT transpose plus beta T VT KT transpose, and then update OT with STQT. And this formulation, the bottom one, allows the chunk code to compute all C deltas at once. Here you may visualize the difference between the previous multi-head attention with the delta net linear attention replacement. Where the Q projection, K projection, V projection, and the beta projection come together using the delta rule. Next, let's talk about the gated delta net GDN. The gated delta net GDN introduces a refined mechanism for managing memory updates in a cache by combining the strings of the delta rule and members gated update rule. If you have studied simple machine learning before, you may know that the members gate update was a core mechanism that provides adaptive memory control, allowing the state space model to dynamically erase past information and prioritize relevant context with linear computational complexity. and then we need a parameter controlling the forgetful state. They're similar to the case in the GLU. While the delta rule enables precise updates to specific key value associations, it lacks the ability to decay or clear memory in a generalized manner. Conversely, members approach uniformly decays all associations using a dynamic ratio, which, while effective, does not account for the varying importance of individual associations. Therefore, GDN addresses, in light of these, GDN addresses these limitations by incorporating a parameter alpha, which dynamically controls memory decay. When this alpha is set to 1, the mechanism adheres to the delta rule, updating specific associations without affecting others. When set to 0, it clears the memory entirely. This parameter enables adaptive memory management by introducing a data-dependent scaler between 0 and 1, allowing for selective decay of the previous state based on context. The implementation leverages DeltaNet's reparameterization framework, maintaining computational efficiency while integrating cumulative decay through a multiplicative factor. Gamma R over gamma I. This gamma R over gamma I term accounts for the cumulative decay. As you may see from the 7 line in the second red circle. It represents the compounded effect of decay over time steps, and this approach ensures effective learning of key value associations while preventing unbounded growth of the cache and optimizing memory utilization. And later part, you may find the difference between the vanilla delta rule and the gated delta rule. A gated delta rule consider a copy where T is multiplied with K beta times G with a last entry set to none. This GC and G capital letter C, you may call them gamma R and gamma C, is the GI and GI and last entry of GI. The chunking are the same, but after corrections all in one chunk is line, the query decays from chunk start and scale. There's O inter is assigned with QI times GC with the last entry set to none at S. The similar difference also appear in AI KIT when you update the state with addition and the ratio gamma R for gamma C. So the whole architectural progression now looks like this. There's another linear layer After gated data rule, you take the normalization and then the residual layer. After gated data rule, here comes the KDA or Kimi linear layer. At this point, the researchers began experimenting with hybrid models that combine multiple forms of attention within one architecture. So they just explore with many different attention mechanisms. The Kimi-linear architecture represents a significant advancement in the field of attention-based model by introducing this hybrid approach that integrates different forms of attention within a single framework. As you may see that within a member hybrid gated data net transformer, there are gated data net and other different attention mechanisms. This model garnered attention due to its remarkable performance, as it consistently outperformed traditional full attention mechanisms under controlled conditions. The authors of Kimi Linear propose it as a direct architectural substitute that not only enhances quality, but also boosts the code throughput by up to 6 times. One of the key innovations of Kimi Linear is its improvement over gated delta net through the introduction of fine-grained gating. Here, the alpha reshape MBCD captures the whole paper's most significant contribution. There's the fine-grained control over memory decay. It replaces a singular scalar decay with individualized decay values for each channel. This fine-grained control is encapsulated in alpha dot reshape MBCD component of the model. That is highlighted as the paper's most notable contribution. The architecture introduces 3 pivotal modifications when compared to the original delta net transformer. Firstly, it employs a hybrid system that interleaves multi-head latent attention (MLA) layers. Secondly, it substitutes the traditional MLP with a mixture of experts (MOE) layer. And thirdly, it enhances delta net's capacity via the alpha projection. These changes are not merely about scaling, but they are strategically designed to provide the model with precise control over memory decay, thereby addressing specific limitations identified in the previous system. While scaling laws continue to be pertinent, it's crucial that any increase in capacity is strategically positioned and formatted to be optimally utilized by the system. And ultimately, the Kimi K3 model represents a significant evolution from the Kimi linear model, incorporating advanced architectural features designed to enhance performance and efficiency. It comprises 23 4-layer macrocycles, with 3 layers utilizing Kimi delta attention and the 4th employing multi-head latent attention (MLA). The initial layer integrates a dense feedforward network, while subsequent layers leverage a latent mixture of express MOE approach. Key modifications include a substantial scale increase, the introduction of blockwise attention residuals, ATTN RES every 12 layers. And we're going to talk about it soon. And then also MLA query lore, output gating, latent space MOE, C2 activations, and gated MLA. The KDA ensures constant state recurrent memory, complemented by periodic MLA layers that maintain comprehensive softmax retrieval over the context. Gated MLA modulates feature integration into the residual stream through element-wise multiplication with an input projected gate. Kimi K3's MOE features 898 experts with a specialized routing. Routing mechanism selecting 16 experts per token. The expert activation process has been refined to use C2. Enhancing computational efficiency despite the absence of a fused kernel, which initially slows activation by nearly threefold. However, operations within a compressed latent space accelerate the forward pass and significantly reduce flops. Additionally, modifications include MLA query lore, output gating, ATTR, ATN RES, which shed approximately 2% to inference latency, but offers selective retrieval of earlier representations and a 1.25 times computational advantage. These enhancements collectively address the limitations of constant-size state operations in KDA layers by facilitating retrieval from both token contexts and earlier depthwise representations. And let's come back to the ATTN RES. In the development of Kimi K3, significant architectural advancements have been made to enhance the model's ability to manage and retrieve information efficiently. The fundamental shift is not merely in scaling, but in redefining how the model stores data, updates its state, and retrieves crucial information that cannot be maintained by a fixed size state. ATTN RES, a pivotal component of this architecture, addresses the challenge of selective access by assigning specific weights to each layer's contribution, thereby allowing the model to prioritize layers that are most contextually beneficial. This is achieved through a query key dot product mechanism that normalizes scores to form a weighted combination of states. Here, HL is assigned with H1 plus the summation of FIH of HI, where I is from 1 to L minus 1. Here, HL is the input to layer L, and H1 is the embedding of the current token. There's a last token in the sequence so far, and the function fi of hi is the output of layer I, which is an attention or some MLP block. by applying residual attention at strategic block boundaries rather than every layer. Kimi K3 optimizes training and inference costs while maintaining performance. The integration of constant state recurrent memory, periodic softmax retrieval, sparse expert capacity, and selective depthwise residual access culminates in a sophisticated system that allocates additional capacity for specific functional roles. This approach necessitates learned selection mechanisms such as gating, routing, or decay to manage interference and ensure efficient memory utilization, with attention serving as the most effective selective rate mechanism. These innovations collectively advanced the model from its predecessor, GPT2, to a more robust and efficient Kimi K3. Here you may find a difference between a normal sum and ATT and RES. ATT and RES residual multiplies each term of that sum by a specialized weight, alpha I, which lets the model give more importance to whichever layers are most useful in context. And here the weight alpha I is computed from a query key dot product. Such that you may have different effect to the HL to the current token based on the previous FIHI by switching the alpha I. In a significant stride towards more efficient machine learning models, Thinking Machines has unveiled Inkling Small, a groundbreaking open-weights model. Let me see if we may also share this paper. Okay, here comes the Inkling. A groundbreaking open-weights model compromises to redefine the benchmarks for multimodal machine learning by compressing the capabilities of the Inkling class into a significantly smaller active footprint. Inkling Small emerges as a formidable contender in the realm of artificial intelligence, boasting 276 billion total parameters with 12 billion active. This innovative model is designed to deliver performance on par with its predecessor, the original Inkling, where operating at approximately a quarter of its size. One of the standout features of Inkling Small is its ability to process audio and images in conjunction with text, thus supporting a truly natively multimodal experience. Furthermore, it facilitates Python-based image inspection during reasoning, enhancing its utility in complex multimodal settings. The release of Inkling Small has been met with immediate adoption across the open inference stack. Notably, VLM announced Day 0 support for the model, highlighting its seamless integration into existing frameworks. Additionally, model underscored the ease of deploying Inkling Small with a single B300 deployment. And by the way, if any people have access to B300 or even GB300, feel free to contact WeebearnMe and let's see if we may utilize those chips more efficiently together. While LMSYS or SGLM provided insights into this decode throughput capabilities, Unsloth also contributed by publishing a comprehensive guide for local running and GGUF deployment. For those who haven't heard about Unsloth, is an entity that the Unsloth Studio is an offline local web UI for you to search, download, run GGUFs. Such that you may deploy your fine-tuned LM directly. Train and run models locally. Benchmarking results have positioned Inkling Small as an exceptionally efficient model for coding and multimodality tasks. According to artificial analysis, here's the guide for money management tips. If you want to compare the performance of different large language models, you may compare. You may find some benchmarks on this website, and it's quite convenient for kids who are interested in LLMs but are also concerned the cost and cost per intelligence index task, and also is intelligence index。呢個 artificial analysis 係對於理財嚟講係一個幾好用嘅網站，就俾你格價唔同嘅頂尖嘅大型語言模型。對於一啲又想試玩大模型，但係又關注佢嘅有幾聰明，同埋佢每做一個任務需要嘅成本關注嘅小朋友，係一個幾唔錯嘅格價網站啊！呢度一個 benchmark， 一個基準網站。Inkling Small scored 40 on its intelligence index, closely trailing the flagship Inkling by just a single point. The model demonstrated notable strengths in areas such as humanities last exam, GPQA, Diamond, Cryptity, and Cycle. However, it exhibited some limitations in agentic tasks and factual knowledge domains. If you want to search for Inkling Small, you may just type Inkling Small in the search bar, and then you may compare it with other models given by Thinking Machine. Community feedback has been overwhelmingly positive, with many highlighting Inkling Small's ability to outperform or match its larger counterpart, Inkling itself, on various coding tasks. The combination of open ways, multimodal input capabilities, 1 million context support in deployment stacks, and 12 billion active compute positions Inkling Small as one of the most practically significant open releases in recent times. Inking Small represents a major advancement in the field of machine learning, offering an enhanced efficiency and versatility in a compact form. As the industry continues to push towards more open and accessible AI solutions, models like Inkling Small, these small models will undoubtedly play a pivotal role in shaping the future landscape of artificial intelligence. Also, in the ever-evolving landscape of software development, cloud agents and persistent memory infrastructure are emerging as pivotal elements in optimizing engineer workflows and data management. Or maybe I can also share the links here as well. You may also check the latest GPT, Claw, and even Kimi K3 DeepSeek in this website. Cloud agents have transitioned from mere demonstrations to becoming integral components of engineering workflows. A notable example is Cursor, where the proportion of merge pull requests (PRs) generated by cloud agents has surged from 10% in December to 56% currently. This remarkable increase is attributed to providing agents with dedicated cloud computing resources, enabling them to enhance their environments progressively. John Palmer, a developer at Cognition, exemplifies this trend by opting for cloud-based development environments over traditional local setups, utilizing Debian in Slack and web applications for his tasks. Similarly, Debian 3 has demonstrated the capability of Debian cloud agents to run macOS with Xcode and simulator access, facilitating the building and testing of native iOS applications. Cognition's introduction of native GitHub Stack PR support further exemplifies the adaptation of agent-generated change sets, highlighting the utility of cloud agents in modern software development. The concept of persistent memory is gaining traction, with companies like Perplexity launching initiatives such as Projects, which evolves existing platforms into collaborative hubs featuring shared files and persistent memory through a feature called Brain. Arash Srinivas has positioned this development as a multiplayer, agent-driven operating system designed to enhance collaborative work environments. On the infrastructure side, TurboPuffer's migration of over 400 million agent memories from PG Vector to its proprietary system boasts a 70 ms P90 hybrid retrieval time and a 97% recall rate. However, research presents a more cautious perspective. A study highlighted by their AI suggests that while file system style memory stores can reduce retrieval costs at scale, they do not necessarily enhance the quality of final answers. Additionally, the quality of these stores tends to degrade under management by most agents, bearing the most robust ones. As cloud development environments and persistent memory infrastructure continue to mature, their roles in enhancing productivity and data management are becoming more pronounced. However, the true extent of their contributions to capability enhancement remains an area for further exploration and validation. As these technologies evolve, they promise to redefine traditional workflows and data handling paradigms, offering new opportunities and challenges for developers and organizations alike. The journey towards fully realizing their potential will require ongoing innovation, research, and adaptation. The field of system optimization continues to be a critical driver of performance improvements also in machine learning and artificial intelligence. Recent developments showcase significant strides in kernel optimization, retrieval infrastructure, and tooling transparency, underscoring the importance of both technical innovation and accountability. Optimization at the kernel level remains a high-impact area for achieving performance breakthroughs. SemiAnalysis recently highlighted the result of GPU Mo's AMD kernel hackathon, where the Redonflow team achieved over a 2x improvement in end-to-end performance on the MI 355X platform. At a more granular level, Mahashi demonstrated the potential of custom attention kernels, achieving a leap from 1.5 times to 2.17 times performance over PyTorch standard scale dot product attention (SPDA). This improvement was achieved by replacing div m div.9.f32 with RCP approx, a reminder of the enduring value of inspecting and optimizing at the parallel thread execution (PTX) level. Additionally, Astro has taken steps to enhance reproducibility and simplify Python packaging by open sourcing build pipelines for pre-built wheels of GPU-intensive packages such as flash attention and deep speed. These efforts are poised to lower the barrier for developers working on high-performance machine learning applications. The growing reliance on retrieval and search infrastructure has sparked discussions regarding transparency in AI systems. Simon Wilson recently criticized leading AI organizations, including OpenAI and Anthropic, for their opaque handling of search dependencies. Specifically, he noted that both companies heavily leverage search technologies while providing limited visibility into their underlying search indices and partnerships. For instance, Anthropic's subprocessor listings revealed collaborations with entities like Brave and TurboPuffer, information that was not prominently disclosed in their product documentation. These concerns highlight the need for clear communication and accountability around the integration of third-party search tools within AI systems. As retrieval becomes increasingly central to AI functionality, ensuring that users and stakeholders understand the provenance and mechanics of these systems is paramount. On the retrieval model front, innovation continues to progress with the introduction of Anderson and Emleton by Antoine Chevin. These fully open multilingual retrieval models are designed to handle long context and code retrieval tasks. Early evaluations suggest that late interaction models, in particular, exhibit strong generalization capabilities. This development is a promising step forward in addressing the growing demand for robust and versatile retrieval solutions across diverse languages and use cases. The latest advancements in kernel optimization, retrieval infrastructure, and tooling demonstrate the dual imperatives of pushing technical boundaries while maintaining transparency and accountability. As the AI ecosystem evolves, these efforts will play a crucial role in shaping systems that are not only powerful but also trustworthy and accessible to a broader community of developers and users. By continuing to prioritize both performance optimization and openness, the industry can foster innovation while building systems that meet the highest standards of reliability and ethical responsibility. Let me introduce again. Weebearn are a comprehensive money educational platform dedicated to nurture entrepreneurs, investors, and capitalists among secondary school students, cosplayers, and anime lovers. Weebearn literally means an otaku money-making channel, a platform designed to facilitate financial gain. We make otaku great again and make weebs rich again. We are also running our United Empires of Otakus, also known as the Weebearn VTubers Alliance, focusing on supporting the development of aspiring virtual idols of the future generations. We encourage participation from interested secondary students or teenagers looking to embark on a VTuber career. If you are a secondary school student and you are passionate about being a VTuber, join our Weebearn VTubers Incubation Program and Auto Agency. And tomorrow we are going to talk about in tomorrow's live streaming, we're going to talk about the algebraic inference from discrete nabla operators to quantum field divergence and real-time spatial compression. This is the end of today's live streaming. Thank you. 本內容講係個人分享，講參考之用，並不構成要嘅銷售資料，由數為任何保證，亦不構成投資建議、專業意見。業務之內與香港推廣任何加碼貨幣投資有風險，投資標的價值可升可跌，個別不一定可預期將來表現，作出任何投資決定前，投資應參閱相關上市文件做風險評估，並諮詢專業意見。本內容無意總有所述證券或投資牽涉任何風險。本內容所述資料根據獨立認為可靠的資料來源編製，而該等資料來源未經獨立核證，故不會就本內容嘅準確性或轉述，不需任何保證陳述或擔保。本內容無意向派發本內容即觸犯法例或規例的司法權區或國家的任何人士或勢力派發，亦無意供該類人士或勢力使用。